Good evening, everyone. It's Thursday, March the 5th, 2026, and this is our first Homebuyer Club of the year. If you remember, the Homebuyer Club was kind of intended that for many of you, we've met on the phone, maybe we've met in person, but the Homebuyer Club was envisioned to add some additional information as you're working on whatever you want to work on from different professionals in that you might meet through the purchase of buying a home. And the first one of the year I'm excited about, and that's we're talking to John McGurk from Blue Sky Closing Services. And the reason why I'm so excited is because for many of you, we've met and I said, well, go to open houses, pretend, just go look at houses. Now I want you to talk to someone at the end. This is the finish line. What John's going to talk about is you getting your home. So this is the goal I think that many of you have stated you want. We work so hard and it comes to the finish line. And John is a huge part of that. Closing the loan is a huge part of it. So John, welcome. Thank you for joining us this evening to share with you what you have about closing. So
Yes.
you
Thank you. It's such an
mentioned,
honor to be asked.
yeah,
So,
well, thank you. And you mentioned your company does closings across maybe the five county area. Is that right?
yeah, I would simplify it and just say like basically Southwest PA. I mean, we've gone as far out sometimes as like Somerset or even as far north as maybe oh gosh, I should remember these counties because I have a cottage in Pymatuning. We'll just say that. What up toward like Conneaut. Um Crawford County. That's what I'm trying to think of. We mainly our bread and butter, if you will, is like Allegheny County, Washington County, Fayette, Westmoreland, Butler, Beaver, Greene. You know, we're located in Bethel Park, so it's easy, and we'll go anywhere. Plus with the 21st century and everything post COVID, a lot of things are available online that weren't online before. So we can be very accommodating.
Thank you for that. So, one of the first questions I had, maybe you can share with everyone is how how do you get your business? I mean, how do my clients pick a closing company? Do they pick it? Does the bank pick it? How does that work out?
So first and foremost, for everybody here, I don't know where you're at in your stage of the process, like what stage you're at, but congratulations. It is a really tedious, exciting, terrifying thing to be doing all at the same time. So, and just like any other real estate professional who gets into this industry, it's just good to know any professional in this industry that you can just call up and just ask random questions to. Now, and before I go on any further, I'm not an attorney, so don't construe anything that I say tonight as legal advice. But I will talk to you about. I will use examples like real life situations that have happened. So, but to answer your question, Jonathan, we receive our business mostly. So we're a service vendor. When you are purchasing a house, you're either purchasing with cash if you have, that capital available, or you're purchasing it with a loan, and that's a mortgage. They record that document. So there's three parts in this whole thing. One is your contract, so that's when you're working with a realtor. The realtor represents you, and you have an agreement to purchase a property. Or let's say you're refinancing a home, or let's say you inherited a home from a parent and you want to put the home into your name and you go through a lender to refinance it because you don't have the cash on hand to buy it out for the estate. In any of those cases, we would get the contract blue sky from the lender or the realtor. In perfect scenario, they'll both send it to me. Sometimes there's miscommunication because certain realtors might have preferred vendors that they use, and then certain lenders might have preferred vendors that they use. So it's all just about communicating.
Is it out of line if the buyer asks to use you as a closing company?
No, in fact, on the contrary, it is your choice as the buyer. You and the seller are both consumers, and your personal information and identity and just non-published private information is of paramount importance. Uh, Everybody involved in this industry, even in other caveats of if you don't work for a lender, if you don't work for a realtor, like your personal information is paramount, and we make sure that it is safe and secure. But every state is different. Title insurance is just that. It's an insurance. Lending is part of finance, and real estate is part of real estate. So depending on what category we're in, we're all governed by certain licenses. Mine is a state insurance license. Same with your lender. Some lenders might be licensed in multiple states. I'm licensed only in Pennsylvania. That's more than enough business that I need. That's enough to work on. So I'm not in any desire to get bigger too fast or anything like that. I just like to do a really good job and help people because my entire career has been in customer service. But as the purchaser of a property in Pennsylvania, you're entitled to do your research, call around the different companies, price them out, and ultimately who you feel the most comfortable with working, that's who you should work with.
And that's a good point, John, because the seller is not really your client, although you serve the seller. The buyer is more your client because
Actually, no,
they're the
more
ones.
my client is the realtor or the lender, to be honest. I look at the buyer as the consumer. We are all sort of taking care of the consumer and making sure they get to the finish line.
Yep.
Yeah, sorry.
So, what does title insurance protect? I mean, I know it's state regulated. There's a chart out there that tells you how much it costs. What does it actually protect?
So, title insurance is a bit abstract, no pun intended, because what we actually research is the abstract of your property is referred to exactly that. So, just a few definitions. Real estate, is actually the land that you're buying. So I live in Brookline. If anybody's familiar with the city of Pittsburgh, we have lots of houses side by side by side. In some cases, they're attached, by shared walls. The real estate is the land. It's very sort of old English, like feudal system kind of language. So like we talk about tenancy, we talk about uh, land contracts. So the real estate is the land, and the house that's on it that you're purchasing with the address is the improvement on the land. The way the real estate is indexed, for example, just very briefly, in the late 19th century, there was a case where a purchaser ordered a survey, went through an attorney, as one would do at the time. That attorney ordered a title search, examined it. The searcher provided the notes. The attorney examined it, gave an opinion that it should be free and clear. They closed. Turns out there was an undisclosed lien. Doesn't matter for how much. It just means that a third party has an interest in that real estate, in that property. And worst case scenario, you lose your entire investment. So at that time, I think we're talking about $1,800, but that's in like 1890s money. So think about it this way. Even if you're taking a loan for 97% down, or not 97% down, say you're borrowing 96.5%, an FHA loan, you only need 3.5% down. On a $100,000 house, that's still $3,500. And for a lot of us, that's a lot of money. That's like when I bought my house, it was just around like 100. And I had ideas in my mind of how much I would need to bring to closing, which I'll get into later. But when you're protecting yourself against it, it may seem like an added cost that may seem unnecessary, but there's so many things that could go wrong that you just have no control over. I say you never need insurance until you need insurance. And then when you need insurance, it's too late to buy that insurance. You have one shot to purchase the policy at closing, and it protects you from any liens, encumbrances, uh, forgery, fraud. There's so much fraud in our industry, which I know Jonathan wants to ask me about because it's what we're like. Continuing education is always about fraud. In fact, I actually had one today and I took some notes there. It protects you against the unknown, to put it vaguely, but I could tell you like a lot of stories about why we would never let a friend or family member buy without a title insurance policy.
And there's two pieces, right? There's two pieces to title insurance. There's a lender's policy
Yes.
and there's an owner's policy. So talk a little bit about that, John, because every time I see a cost estimate, I see the word optional. next to owner's policy.
Yeah,
What's your
that's
thoughts
a
on that?
delicate point. That came up in 2015. I'm not sure. Everybody here look maybe old enough to remember the big bad news in 2008 when there was a big housing crisis bubble burst. Um, the reaction to that, one may argue, may have been a little bit overreactive, but regardless, went into effect in 2015. And they revised the documents that we use to summarize and the settlement of the property, meaning all the money is on a sheet, all the credits are in, all the charges are there, the difference is what you owe, and vice versa for the seller. Buyers did not quite understand what it is they were purchasing and for what terms. Meaning, the lenders promised them a certain payment due by the 1st through the 15th of every month for the next 36 months or 360 months. That's 30 years, and they would change them. And the people weren't able to make their payments. They went underwater, and it just ruined a lot of people's lives, to put it shortly. So I don't know why I digress there. The owner's policy, I don't know what the point of that was. I just came from a long day of work and I have a little bit of a head cold right now. So the owner's policy protects the owner and the lender's policy protects the lender, to put it plainly. When you're purchasing, let's say again, $100,000 house, for just for ease of understanding the rates and things. Title insurance is set again, it's regulated by the state, as is my license. So there's a ratings bureau in Harrisburg who determines the prices of the title insurance policies. In Pennsylvania, you get two policies for the price of one. What does that mean? If you're buying a $100,000 house and you're borrowing $80,000, you are required to purchase title insurance to insure the lender. So you have to insure the lender's $80,000 mortgage on the property because that's their skin in the game. If you don't make your mortgage payments, they'll take it back. If somebody else steps in and says, I own that house, there was an illegal deed from 20 years ago that I never signed off on and I own that house, that protects the lender's investment. That does not protect the owner's investment. That basically, if something like that were to happen, among many other things that could possibly come up, that lender would file a claim on the insurance policy, which is underwritten by one of any number of national insurance companies. I underwrite through Fidelity National Title Insurance. You may have heard of Fidelity. They have a huge, broad network of underwriters. And First American Title Insurance Company. Those two, I think, are like the first two title insurance companies, and they all originated out of Philadelphia. So to purchase an owner's policy, you purchase the lenders, but you only have to pay the difference between the lenders and the owners. So you insure up to 80, but then whatever the price is for the premium for a $100,000 policy, you subtract the 80, which you already are accounted for, and you just pay the difference. So in short, you pay the full price premium, whichever is higher, and both policies come with it. And what the protection is that you have as the owner is, should something come up, you don't have to worry about taking it to court. You don't have to pay all those legal expenses to fight this thing. We have a file right now where our title searchers provided us a legal description of the real estate and broke it down into 3 tracts. Unbeknownst to us, we were only supposed to transfer the first tract. So because it was an error that the title insurer made, that's a claim on the title insurance. That's not something I have to pay out of my pocket, nor is it something that the buyer has to pay out of his pocket or her pocket. So that's what helps when you're adding all the numbers together that you owe at closing. Sometimes you see that word optional, and that's why I was saying that originally, Jonathan, was that word optional was required by law to be put there in 2015. And it gives borrowers, a false sense of security when lenders tell buyers, well, you don't need the purchase and owner's policy. It's optional. You can save $300 by not buying it. But what you get in exchange is, if there's a problem, you're going to be spending thousands of dollars to defend yourself and possibly lose, so they don't tell you that part.
Big thing to me, John, is that the lender's risk is going down. and the owner's risk is going up. As the home appreciates, as the mortgage is paid down, our borrowers are more at risk. As you pay down the loan, the bank's risk has gone down. So
And
great
eventually
points
that
on,
policy is not null and void after that, after
yeah,
you pay off and satisfy that mortgage, you know?
yeah. And then if you were to refinance it, you can still use that policy. Is that true?
No, if you
Refresh it,
refind,
maybe?
oh, the owner's policy, you're saying.
Yeah.
The owner's policy is good for as long as you own the property. So as long as it is in your name, if you get married, even if you're male, female, it doesn't matter. If you change your name, you're
Mhm.
still the owner. You can still connect the dots and show that you are the owner of the property. In Pennsylvania, spouses have an automatic interest in real estate. So sometimes we have people who like just got married and they might be one of them might be changing their name, and it just timing's not going to work out right. So we'll even tell them like, just call us after you do it, and we'll update your deed. Or
Yep.
we'll if a boyfriend and girlfriend, fiancés bought a house and their title is unmarried and unmarried after they get married, if we did the closing, we'll say call us and we'll make it husband and wife so that you're protected in the future. We look out for all the unforeseen things that you can't think of.
Let's fast forward a little bit to the closing itself. And I'm going to date myself because when I was lending, to me, a closing was everyone was in one room, signing the papers and handing over keys. And then COVID happened to us and nobody was around. Everyone was electronic or through uh, notaries, I guess.
Yeah,
Where
remote
are
online
we?
notaries became popular. Yeah.
Yeah, where are we today in 2026, John? What's a normal, typical closing look like? Is it more electronic? Is it more face to face? What are you seeing in the market?
I would say it's the best of both worlds and then some. It makes me laugh because sometimes I'm like, they do know they're buying a house, right? Like it's not like they just ordered a t-shirt on Amazon. Like we live I don't know how old everybody is here. I'm an elder millennial. I was born in 1984, but I have Gen Xers for sisters, so I was just as much a latchkey kid as they were. So I identify with them a lot and roll my eyes a lot at my own generation of people who are like pushing for more electronic, easier, more convenient means of doing things. And while the tools that became available during COVID for safety reasons are very valuable and very convenient and useful, they should not be deferred to. They should not become the rule. They should become the exception. So they are still available. I would say there's a pretty even split. Most closings are still your traditional, very friendly round table transaction where a buyer and a seller sit at a long conference table and everyone chit chats and smiles and asks questions, and it's an experience. And for us, title agents and closings and catering more toward the buyer, since you chose us and it's your big day, like sometimes we'll know in advance if like the sellers might have like we call them special circumstances. If there's like a really ugly divorce or some emotional like estate. And sometimes we will suggest like maybe you should sign in advance because we don't want those people to like suck all the air out of the room on your happy day. Another special thing that we give people, we have Sarah's candy chocolate bars at all of our closings. We've always done that. So it keeps people sweet. Sometimes it's like breaking bread, but breaking chocolate. The alternative is a lot of times sellers might have already moved if they're leaving the state. So they will let us know in advance that they're not going to be able to be there physically in person on the closing date. So they'll let us know, and they have options depending on which county the property's in and what the recorder of deeds allows us to do. Uh, we can either meet with them in advance, they can come to our office, we can meet them somewhere, a secure location. We can provide them the documents to print, or we can overnight them the documents to take to a notary of their choice if they don't live very close to me. Or again, we can set up a remote online notary if the township or county permits. And that is the big advent during COVID was as long as you have, like, we're all capable of doing it. We all have a laptop or other tablet or device that has a camera and microphone. Most of us do now. That it verifies your identity, it makes sure that your AV work on your device, and it connects you with a notary public by video call. And again, it's a great tool, but it should not always be the rule. It should be the exception. because fraudsters, I guarantee at some point, I mean, with AI right now, like some of those deep fake videos that exist now are like terrifying because once you were able to tell by looking at the hands if they're like wonky and weird, but the AI is only getting stronger and it's just another tool for the bad guys to use to intercept closings and to sell properties fraudulently, So that's my point is we always try to do it in person, but there are methods. And then, of course, if a buyer lives out of state and they're relocating to Pittsburgh and they live in Florida and they won't be here on their day of closing, that's what we call a bail away closing. And I will set up a mobile notary who does closings in that area to go to their house, sign the package, send me a copy of it, overnight it back to me, and I just fund or disperse it the next day.
And you bring up a really, really nice point, and something that you don't think about is that the seller, it's an emotional day for them. Maybe they
Yes.
raised their family there. Maybe it was their parents' home. Maybe it was a divorce and there's some feelings around it. So yeah, there's, as exciting as it is for our buyers, it's also can be an emotional day for the seller as well. How long does a normal closing take, John? What is it, an hour? Is it 2 hours? What's it take?
It depends on how chatty everybody is, but also it depends on how if there's a loan or not.
Yep.
If the lender now participates in a hybrid closing, which means some of the ancillary loan docs can be e-signed, and like the mortgage, the note, and some of the more important docs still require a wet signature, a notary. But we budget an hour per transaction, if you will. Some of us can get them like a cash deal with no agents done in 15 minutes.
Different, yeah.
Sometimes things come up and like a bad walkthrough and things have to be negotiated at the table and you have to like walk on eggshells and tiptoe around lenders and that could sometimes take 2 hours. It all depends. Most of the time I would say safely between 30 and 45 minutes.
All right. And then how are clients paying for that? So let's say they need to bring $2,000 to closing. How's that typically handled in today's market?
General rule of thumb are funds required for closings must be certified funds.
Okay.
So when you hear someone saying, I'm buying $100,000 cash, no inspections, that does not mean they're showing up with a suitcase full of money. There are a lot of anti-money laundering mechanisms in play all the time in our industry. Some that just actually got ignited on the title end at the beginning of March. But certified funds means a cashier's check. You go to your bank teller, you tell them, I need a cashier's check payable to Blue Sky Closing Services or whatever the title company is. You could also make it payable to yourself and write it over to them at the table. But some companies now lead away from that because of the advent of mobile depositing. Not that we want to suspect any of our buyers of being up to like no good or something, but we live in a crazy world. Or a wire transfer. And that's usually really, really, really like a terrifying thought for some people. I would say more older Gen Xers or like boomers are very, very weary, as they should be, about wire instructions. A lot of younger people, us millennials and Gen Zers and everybody after who just want to go, 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 you can send them wire instructions tomorrow for closing in 6 weeks, and they'll just go and wire the money and not even think twice about it. And that's what you have to be afraid of is you always have to be sure of like who are you communicating with in this transaction? Have you vetted them? Have you verified you know who they are, how to reach them, what their email looks like? So those are the rule of thumb: cashier's check or wire transfer, certified funds. Anything less than 1,000, typically we could just take a personal check. Sometimes you take a VA loan or like a rural development loan with the like URA or things like that. You might owe less, or you might even be getting cash back. In which case, you can provide us wire instructions. I can't avoid a check, or we can hand you a check. But most often, it's cashier's checks and wire transfers.
Yeah. So, and that brings up a good point, John, is people are moving, wanting to be homeowners. There's some planning, right? You need to go to the bank a day or two before the closing in order to get this certified check. So, um, there's some planning that goes into it and
Yeah.
some, how am I going to make this happen? So good. Um, we talked a little bit about fraud, a little bit about wire fraud. What kind of cautions, I guess, what kind of advice would you give someone to try to reduce their risk of fraud when it comes to purchasing a home?
So the long and short about fraud is fraudsters are, it's like excuse me, the Hydra. You cut one head off and three more grow back. They get smarter and smarter. Their one job in this world is just to fraud people and to trick them, you know. And there's so many ways to trick people because as a buyer, especially, or even as a seller, you are inundated with so much noise and information in this process. You you meet a realtor, you let them know that you're interested in buying a house. They set you up with an MLS blast. So you're getting blasted with generic automatic emails, allegedly from your realtor, but it probably went through their broker. And who knows if their broker's server is secure. And before you go to look at a house, I mean, even before you even talk to the agent, you may have also already spoken with a lender. And the rule of thumb is you don't waste a realtor's time without having at least like a pre-qual letter. Now, lenders have become very efficient in the past few years, mostly I would say around COVID onward, where they pre-clear a lot of your conditions. So they are already collecting personal information of yours, and contact information for you. They know where you've worked. They know whatever's on your credit report. Like they get that information. We have no idea how secure their servers are. No matter how many times they tell you we work at secure servers, and that goes for title too. Like we can all promise and promise and promise, but we're only as strong as our weakest link, you know. So I say all this because you've already given your information to at least two entities, and then you're about to meet a third, the title company. In that mix, realtors might have assistants. Loan officers or a mortgage like lender or broker have processors. If anybody in this process gets fooled by an email spoofing somebody or phishing for information, oh my, we had the wire instructions changed at the last minute. We urgently need you to open this and send the wire here. And don't open it. You know, urgency, that's one of the things I wrote down today. Urgency is a big red flag. You know, like nothing we should do should be like everything is urgent, but nothing we should be do that we have to do should be done in haste. So I say all that because we all want instant gratification and we want to communicate as quickly and efficiently as we can. We often make big group emails, including the realtor, the lender, the title company, their assistants, all in one message. And you're talking about your transaction. We're buying this much. This is the lender. This is how much you're borrowing. I talked about all these extra people, but we didn't talk about you. Let's say you have just a simple Gmail email, a Yahoo email, a Hotmail email, whatever email. If you ever fell prey to clicking a link that was sent to you because your UPS package was delivered somewhere else that you don't remember ordering, or your bank, your PNC account was hacked, click here to they if they have access to your information, they can get into your email. They see that you are a party of a real estate transaction. They see who the people are. They create a fake email. They mask that email. So, like when you're looking at the email, the address for that person says John.McGurk at Blue Sky CSI, but they might spell sky like SKI, ski. And to you, inundated with this information, might never notice that change. So now you've got this extra person who's not a party of your transaction spying on every detail and update you make. And when somebody else in our office responds to that message and says, your funds for closing should be wire transferred, We'll send them to you. Make sure you print them and call us to verify them. They'll delete them from your email before you ever see them. They will send their own email pretending to be that person from Blue Sky. And they'll say, you need to send us your money tomorrow in order to close next week. Urgency. And because you don't know, you did not think to question the trustworthiness of anybody involved here, you go ahead and do what they do. So a week rolls up, you show up at the closing table, and we say to you, like, hey, I didn't see your money come in. Do you have a receipt for sending it? And you say, like, well, I sent it last week. And I say, well, I only sent you the wire instructions like 2 days ago. You never called to verify it, and your money's already gone. It's sometimes too late to ever recover it. You have to get the FBI involved. That is the typical way a fraudster hacks or hijacks a transaction. They used to prey on sellers and title companies, and they would play the whole game of like, hey, I'm the seller. I want you to wire to this account instead. And then title companies became wiser. So then the fraudsters, in reaction to that, become wiser and realize I can catch more fish if I go after the buyer because the buyer is talking to a lot more people than the seller is. So that's the whole kit and caboodle of how the fraud industry operates, and they make a lot more money than anybody in this industry do.
So an old-fashioned certified check is always a good way,
Yeah.
or call and verify. If you get wire instructions, and just call the person you know at your closing company and just confirm. Did you guys send?
Know who you're working with. Know
Yeah,
who you're talking to.
call and
You know?
confirm just to be sure.
Yeah.
So, well, good. We're time goes quick.
Yeah, I know.
I
We were
know.
saying I could talk for 3 hours.
So I know I covered some of the questions I had in mind. Do you have anything, John, that you felt that you wanted to cover?
I don't, again, I'm going to say this as, I'm 42. I bought my house 11 years ago at a time that, sorry, I have my tissue here. I didn't have a lot of buying power. The rates then were in the fours, which for us, historically speaking, was very low. We were very spoiled in the fours for very long. COVID happened and everything got manufactured. Like the rates went further down than they ever were supposed to. And now we're like rebounding from that. There's a lot of problems because of that. Don't let the talk of rates being higher than what they were scare you. The rates now pretty much are where they should be. The thing that's a little scary are the sales prices because a lot of those emotional sellers who owned their house for 30 years and decided to wait and not sell it when the going was good during COVID still think their houses are worth what they were 5 years ago, and they're not. Uh, be flexible. Know what things like you cannot live without, like you absolutely need this many bedrooms, but also keep an open mind when you're looking at houses and pay it. Like the most important thing is, does the house have good bones? Are there water issues? Water is the creator of life and the destroyer of worlds. And when it comes to preparing yourself financially and getting your ducks in order, sometimes I say make a spreadsheet like on Excel or something with your their money in what you expect to make every month. If you are in a service industry, this is what I did at the time. I worked part-time still for a restaurant. I would estimate what my tips would be every week plus my pay. I had the idea, then I knew what bills I had to pay. I knew how I had to spruce up my credit. I got all those ducks and I saved a little. And it was funny because like I said earlier, when it came time to closing, I thought I was going to owe like 6 grand, but I didn't take into account the credits for things that I already paid for in advance. I.e., you usually pay for your appraisal report to your lender in advance, like a deposit. You also put like earnest money deposit down when you sign a contract with a realtor to show the seller that you're serious. Like if you walk away because you change your mind, you're going to lose that hand money. So, and then you have your loan. So, all in all, you have your purchase price, you have some tax prorations, loan fees, escrows, but then you have your hand money, you have your appraisal, you have your loan amounts. So, you really only have to pay the difference. It ends up being surprising that, at least for me, I owed a lot less at closing than I expected to. So, it can be really daunting and scary but it's also you can move past these emotions and fear and not lose sleep at night by just picking up the phone and calling a trusted resource, i.e., your realtor, your loan officer, your title company. We're all spazzes. We don't sleep at night. Like we are there to help you because we care very, very passionately about what we do. Everybody deserves the chance to own a home, and it's very daunting, and you need people you can trust to hold your hand. So that's all I got to say.
All right, and we appreciate it. And I had a couple of questions come in, John. I don't know if they're specifically for you, but I want to make sure that we at least cover them.
Yeah.
So we had a question about, are there newer built homes for sale through HUD? So I don't think John and I would know either that, that would be on the HUD site for newer homes that what you might call newer. So I don't have an answer on that one. And
You
then the
might
other one
actually
was,
see listings that are listed as foreclosures. Like, I think in the next 5 to 10 years, you're going to see a lot of them because people bought houses during COVID that they brought like negative 30 to $50,000 like negative equity to closing,
yeah.
thinking it would save their marriage or something, and it didn't. And now they're divorced. They couldn't make the payments of the house. They lost the house. You might see some nice houses that are listed from HUD,
Mhm.
but those are really stressful deals to go through. So
Okay.
just buckle up.
Good point on your part there. And then the second question we had come in, John, was it how to acquire vacant properties free of claims or sheriff sales. So if you're in Allegheny County, there's the Vacant Property Recovery Program. It's a long process. It's on the county website. You just look up vacant VPRP, I think it is. And
Yes.
you can learn about the process. And there is a process. And when you're dealing with a governmental agency, the best thing to do is follow instructions.
And be
Don't,
patient.
if they want you to if they want you to send this in, send that in. So, look at that. But John, are you familiar with any other ways to acquire vacant properties free of claims or sheriff sales?
Well, so that's funny you bring that up because I just got two this week that this was not something we ordinarily dealt with. Again, because when you're dealing with sheriff sales and like tax sales, they're not always marketable because there are things, blemishes that might require what's called a quiet title action. Uh, for example, up at the cottage I mentioned in Pine Tuning, my family owns this parcel. There's a vacant lot that's wooded that's been there for years and years and years. And we've always wanted to purchase it and make sure that like nobody could just like buy it and put something there. But we pulled the title on it just because we could, it's public information. And it's messy. And there is the possibility that like literally somebody lives right around the corner. There's a deed for that property in their attic in like a chest or something. So a quiet title action requires you to engage an attorney who takes a title search and then advertises it through periodicals, newspapers, everything to make sure that anybody who might have an interest in that property is properly notified of a pending sale. So that being said, we're never buying it because it's just not worth the time or money. City of
And probably no
Pittsburgh
one
has a
else can
great
buy it.
program
Yeah.
where they own a lot of property in the land bank.
Yeah.
And so a lot of people might have a house and there might be a vacant lot next to them. And you can contact the city to look up their vacant property records. I think if you went into city county building, honestly, they have a little computer set up there that I think you can look them up there too.
Okay.
Probably a little bit more streamlined.
Yeah.
And if you're interested in purchasing it, you sign an agreement, like a land contract with the city. You hire a title company. They do the title search. They put it into the format that the city wants. This We send the title search to the city. They pay for and take care of the quiet title action using their own resources. And then once it comes back free and clear, they then put it up for like a final auction to make sure that there's no one finally out there who has like the end all be all interest in this property. I.e., if you offered to buy it for 1,000, it could go up to 18 grand at that point. If they outbid you because they care that deeply to own it, say la vie, that's it. But there are avenues to do it. It's just a little tricky and take time consuming. You just have to stay the course.
Good point. So, um, we can't thank you enough, John, for
Oh,
sharing,
thank you.
sharing what you do. Hopefully painting a little bit picture for everyone, what they can look forward to as they move forward towards closing. And let's just check one more time. Grant, any other questions out there before we close it out for the night?
None have been added to the chat. If anybody has a question they'd like to ask, feel free to unmute yourself though.
I will reply all to the message containing the link because I everybody's phone numbers are there, right? So you'll have my contact information if you think of something or you're in the process somewhere and just want to like talk to somebody else about it, or ask me a question. I'm always happy to help in any way I can.
So what's that phone number, John, if someone were to call you?
412-595-7263.
Good. Thank you, everyone. Like I said, we're excited to kick off the year with our home buyer clubs and good, smart people like John and Blue Sky Closing certainly help us do that. So we'll be doing
Uh,
some,
okay. I'm sorry. I've
oh,
been trying to unmute my phone. My question was, can you please repeat your phone number for me and your
Yes.
name? Because I came in a little late.
Oh, it's okay, Deidre.
Okay.
412
Yes.
595
Okay.
7263.
Okay. And it's
And my name
John.
is John. Yeah.
Okay. Thank you. I was trying to
Yeah.
unmute. I'm sorry for the
Oh,
interruption.
don't be sorry.
Okay.
thank you, everyone, for coming. And we'll be sending out some, as we set up new home buyer clubs, the other three for the rest of the year, we'll send out notifications and we appreciate you coming. If you have any questions specifically, for me or John, call, email, and we'll be happy to help you with those. So thank you for coming this evening. Thank you.
Good luck,
Okay.
everybody. It's very exciting.
It
Stay
is. I
strong.
am. Thank you.
Thanks.
My pleasure. Bye.
Bye bye.